Hi guys, welcome to this Money Control live stream. It's a Friday morning and thank God it's Friday. Yesterday we clocked in a record close for the Nifty. It ended above that 22,500 mark for the first time ever. But the broader markets cooled off from the day's high. Today the setup is not looking all that encouraging, but given the fact that we have been kind of ignoring global cues, so to say, we'll have to see whether or not we manage to hold on in the green and end the week on a high as well. But of course, lots lined up over the next 30 to 35 minutes. We'll be getting your big market voice on how to ride the rally on the Lal Street and which are the pockets that are looking good for investment over the next 2 to 3 years. We'll also be taking up all your stock related queries. So if you have any queries, keep them coming in on our live feed on YouTube. We'll try and get them addressed by our experts on the show. But before we move any further, let's take a look at the top headlines at this hour. Dow drops for a fourth straight session, clocking its worst day in over a year. Stocks slide amid a surge in crude prices and comments from Minneapolis Federal Reserve President who raised the possibility of no rate cuts this year. All eyes will be on the monthly jobs report that is due later today. Asian markets open with deep cuts as well as uncertainty builds over the Fed's rate cut trajectory. The GIFT Nifty is suggesting a mildly lower start for the Indian market. Crude prices surge with Brent rallying past the $90 a barrel mark amid escalating tensions between Iran and Israel. And RBI's Monetary Policy Committee will announce its policy decision later today. Remember, it's the first policy of FY25 and the last one ahead of the elections. It's likely to be a no surprises status quo kind of a policy, but growth forecast may be revised upwards. We will be, of course, watching out for that. Governor's statement at 10 a.m. Well, just about less than 10 minutes to go for the markets to open. Let's take a look at the cues for trade then. The Nifty, ended above that 22,500 mark for the first time ever. It was a record closing for the Nifty. In fact, but the broader markets, the Midcap index also hit a fresh high in intraday trade, but cooled off from the day's high. India VIX continues to cool off. It was down another 1% yesterday, so 11.2 is where the India VIX is at the current juncture. If you look at the FNO cues, for the April series, the Nifty open interest, was down 3.2%, shed somewhere around 3.1 lakh shares yesterday. In fact, Nifty April futures is trading at a premium of 97.6 points vis-a-vis 107 points. The Nifty Bank, open interest was down 11.5%, shed somewhere around 2.3 lakh shares. In fact, if you look at the options cues, the Nifty put call ratio jumped to 1.17 on April vis-a-vis on April 4th rather yesterday vis-a-vis 0.95. If you talk about the stocks in FNO band, no new stocks in the FNO band today, but SAIL, Z Entertainment and Hindustan Copper remain in the FNO ban. Fund flows, both FIIs and DIIs were net sellers yesterday. So FIIs sold stocks worth 1,136 crores in the cash market, and DIIs as well, sold shares worth somewhere around 900 crore rupees in the cash market. But of course, on that note, let's introduce our technical guest for today. Then joining me is Raja Venkatraman of NeoTrader. Raja, great to have you on the show. Yesterday, we once again hit a record high, 22,600 for the first time ever. Although we did cool off from the day's high, but we've seen that every dip is getting bought into. Today, the setup is negative. So, would you suggest buying on dips today as well?
Yeah, good morning, Nandita. Thank you for inviting me to the show. So, I recall a few weeks ago when we were witnessing 22,500 to be a ceiling, right? Now, what has happened is the 22,500 has become the floor. So, when I look at the option data, I clearly find that 22,500 and 48,000 are going to be levels that are going to be well defended. Now, considering we have an RBI policy in play and with its outcome pretty much everyone is aware. So it's not going to be a trend changer here. Yes, we're going to begin on the lower side, largely driven by the global cues. And when you take a look at the global cues, they have been waxing and waning for almost more than 2 years. This rate cut, all the humdrum surrounding the rate cut is waxing and waning. So it's really not a trend influencer once again. So what we are really left with is the result season, which is going to begin in few days from now. And with HDFC Bank also showing some good promise of holding up the Nifty, I think that it's going to be a buy on dip scenario as we begin the day. And as we are observing the GIFT Nifty, it's already given us a dip. So one should not be wasting much opportunity here. And I would be a buyer on the indices if they were to break above the 5-minute high, because that would be a good start to the index trading. Now, when you take a look at the stocks, there are stock specific action happening, sector rotation is happening, and one should definitely not sit on the sidelines like I've been telling all this while. One should be a buyer, and one should definitely not look to sell this market, because the market is definitely poised upwards, and I think that the upward trajectory should continue. And I envisage a target towards around 23,000 by the end of this series. So I am a positive buyer here, and every dip is going to be a buying opportunity.
All right, every dip, will be a buying opportunity, not a, selling kind of a market right now. But let's talk about the Nifty Bank Index. It is above that 48,000 level. Today, of course, you have the RBI policy. What or where are you expecting the Nifty Bank to head in today's session? Would you say that 48,000 is likely to hold, or do you think it could see some bit of cool off?
Yeah, see, first of all, the bank Nifty will definitely try to test the 48,000 levels, considering the kind of volatility which is in play. And right now, till it was unable to cross the 48,000, there were a lot of ifs and buts, and not much of help from the private banking peers as well. Now, with the kind of momentum seen in ICICI Bank, HDFC Bank, so we should once again see the bank Nifty play a role in helping the indices move higher. So now the key level to watch out for on the spot is a close above 48,200. So yes, it has moved up. Now I would like it to move up further, give a strong closing above 48,200. Then it will open a new vista for Bank Nifty, and I expect a target towards 49,500 within the next 1 week.
All right, that's the level on the higher side to watch out for on the Nifty Bank Index. But stock of the day, according to me, should be HDFC Bank. The ADRs jumped over 5% last night. Yesterday, it came out with fairly good Q4 update. Deposit has seen a good uptick over the last quarter. And Street is fairly positive on this stock now. If you look at some of the brokerages, they have come out with targets of somewhere around 2,000 rupees on the stock as well. And everybody has noted that the deposit growth has surprised on the upside, and the decline in corporate loan growth and the loan to deposit rate ratio rather is excellent, and the valuations are attractive at the current juncture. On the charts now, would you expect HDFC Bank to stage a good recovery and head towards the 2,000 level?
Yes, this question has been posed to me several times, and I have not been a advocate of a buy in HDFC Bank. And yes, it had reached my intended targets at 1400. And what has happened after it reached the targets which I shared on the show is that the stock has spent sufficient time at those levels, which clearly indicated that that was a very good zone to buy into, and the stock has given a nice move to the upside. I feel that the prices could now move towards 1700 region in the next 1 month, and it's definitely a buy here. I see that the prices are going to scale up much higher, and it's going to play a major part in helping the bank Nifty, as you all know that the weightage is higher. So I feel that HDFC Bank will play a major role in pulling up all the other private banks as well. And I think that the good times in bank Nifty are emerging right now.
All right, good times for Bank Nifty. So then what about IndusInd Bank? The stock has been sideways so far this year, but it has come out with its fourth quarter update as well, and deposit growth has come in double digits, 14% on a YY basis. How is this particular bank placed in the private banking lot?
Yeah, compared to HDFC Bank, IndusInd Bank, yes, though they have come out with some good reporting on based on the Q4, it still has to show some more metal here, and the kind of constant selling at higher levels, which is seen in this, is still not withdrawn. So I would be a very cautious buyer in IndusInd Bank. But then, if you ask me about HDFC Bank, I would prefer between them. HDFC Bank is a better bet.
All right, that's the view on IndusInd Bank. But before I come to your picks, I want to talk about Bajaj Finance. AUM growth has been strong, 34% on a YY basis, but new loan growth has disappointed. Of course, there's been an RBI ban on two of its products, which, according to brokerages, has led to this miss on loan growth. Bajaj Finance, if you see, it has been attempting to make a recovery. Jeffries has placed a target at over 9,000 rupees on the stock, 9,400 in particular. So would you expect the meager rebound that we've seen on the stock to continue here on? Does it have more legs, or do you think it will remain sideways?
Yes, definitely. The tides have changed. Unlike what we were expecting a few months ago, the festive season did not do much help, did not render much help to Bajaj Finance. But now what has happened is that the sharp decline had reached an oversold position, and yes, now people have found some good value in Bajaj Finance, and the constant buying which is happening, considering its pedigree and the constant FI participation also that has been seen in the stock, it should take it towards the 9,000 levels that is mentioned, because it has been actively tracked by the brokerage houses as well. So definitely all does augurs well for this particular stock.
All right, that's the view on Bajaj Finance. But before, just about a minute to go, less than a minute to go for market open, what would you be keeping on your radar for today, Raja?
Yeah,
Very quickly.
sure. I would be going with the long in Polycab. The stock has shown some good recovery here, and I think that one should be buying it at current levels with a stop loss at 5,200 for a target towards 5,360, 5,410. And the second stock which I would recommend is from the pharma space, Glenmark. Glenmark has shown some great promise. It has spent some time in consolidation, and the breakout above the 900 levels has definitely given it more legs. And I can see a buying at current levels with a stop at 997 for a target towards 1025 and 1033.
Right. Well, the markets have opened on a subdued note, as was being expected, but it's not really a bad open, given the fact that the global cues are fairly weak. They're quite negative, with the Dow clocking in its worst day in over a year. So in that light, the open has been negative, yes, but not that bad. So Midcap index, in fact, is towing the positive line as we speak. The Sensex is down somewhere around 0.3%. Nifty is down 0.3%. Midcap index back in the green. The Bank Nifty has slipped below that 48,000 level. But nevertheless, no big cuts coming in. Of course, there is going to be some bit of volatility ahead of the RBI policy announcement, and that is what is playing out at the current juncture. Let's take a look at some of the other sectors and see how they are doing. Pull up the realty pack. See how that sector is doing. The rate sensitive basket is what I want to pull up. Nifty Realty is holding out, 0.5% gains coming in there. Autos, let's see what that is doing. Given the fact that autos have had a good run yesterday, we saw some bit of a green tick on autos. Today, it's down and out, not down and out really, subdued so to say. Metals as well, 0.5% lower. So the texture of the market is tilted on the negative side, but nothing really to take home about, given the fact that it is a fairly muted open so to say, not such a big cut coming in. If you look at what the global markets are doing at the current juncture. But on that note, let's also take a look at some of the stocks that are on the top gainers list on the Nifty. Nestle India, that's the top gainer, given the fact that has been some relief in the Maggie case. And, reacting to that, top Nifty gainer, SBI Life, Dr. Reddy's, NTPC, Reliance Industries, of course, yesterday had a down day, but today it is among the top gainers. HDFC Bank, trading with a green tick, no big up move coming in just yet, but the ADRs were up somewhere around 5%. Of course, strong Q4 update, and the fact that FIIs have reduced stake and the headroom for foreign investment has gone up in the stock. That's also being looked upon as a positive, because that could set the stage for higher weightage on the MSCI index. But of course, the decision for that rests with the MSCI. Aside of that, on the losing end, we have BPCL. So OMCs continue to be under pressure as crude prices have surged past that $90 a barrel mark. JSW Steel, Tech Mahindra, L&T, Hindalco, Axis Bank, Bajaj Finance is in the red. The new loan growth has been disappointing, even though AUM growth has surprised on the upside. But with that, Raja, thoughts on Nestle? We've had brokerage reports which had said that all the upsides have been priced in the stock. Today, of course, it is reacting to the news flow. But how is Nestle looking on the charts among the consumption stocks?
Yeah, Nestle has not been a great mover, and yes, the FMCG pack is slowly waking up, but Nestle would continue to be an avoid from my side because largely because it has not been able to generate any kind of positive momentum over the last 2 months. So I would rather look at some other FMCG stocks, say like maybe like a Havells or Voltas.
All right. And if I ask you for an F&O strategy for the day, looking at the market open, what would you suggest?
So looking at the market, I would first wait for the first 5 minutes. I would first see what is really happening here because right now the market though has opened on the lower side. I would wait for the market to stabilize here, and after the post the market open, right? If you take on the minute, the market has actually bumped up. So like I said, it's a good buy on dip opportunity here, and like I said, the dip has occurred. So if one needs to parcel their approach, then they should look this dip as a buying opportunity.
All right, look at the dip as a buying opportunity. Hold that thought, Raja. We'll come back and talk about stock related queries from our viewers as well. But joining me now is Sunil Subramaniam of Sundaram Mutual. Sunil, thanks a lot for taking out time and joining in. There we are staring at new highs, 22,600 already on the charts. Would you call this the much awaited pre-election rally that we were waiting for? And how much more upside do you see from here?
Yeah, actually, according to me, the pre-election rally started in December. Okay, when the assembly election results came out, so that month saw almost 70,000 crores of FI inflows. So I think the early bird came in then, right? Since then, subsequently, I think the flows will keep coming in. But, most of the election result I felt got discounted very early in the day. So what you're seeing now is more of a reinforcement of the India story coming in through tax collections, through GST, through GDP growth numbers. So I think the economic story of India and the fact that the government, even in a pre-election period, seems still to be focusing on capex and infrastructure. So clearly the confidence in the government that they're coming back and say they don't need to take the eye off ball off the capex and go into consumption to kind of do that. I think that's heartening. So long-term FII money, I feel, is sustaining its flow. Added to the fact is the fact that domestic investors, right, I think continuing to repose faith in an economic growth story and the fact that in an alternative scenario of bank deposits, they are clearly over the last post-COVID itself, if you see, people who have invested in equities have made very good returns and comparing to their bank deposits. So there's been a significant shift from bank deposits into mutual funds, mainly through the SIP route, which is giving a buying support. So what FIs are saying, even in short-term volatility, if they take a call, or thanks to the the SEBI concerns around the small and mid cap led to a small correction, immediately buying support stepped in. So I think what you're seeing is that there's a sustained capital flow from abroad and from here. So to treat this as just a pre-election rally would not be right. I think that this is a rally which is a sustainable rally. So the fact that it's happening, a month or so before the election actually gets on the ground makes you term it a pre-election rally. But I think this is a economic growth rally, both from abroad and from India.
Right, but I want to shift your attention to the global cues. The setup has turned a little volatile, right? Crude prices have once again surged past 90. Plus, yesterday we had a Fed member, floating the thought that there may not be a rate cut if inflation remains sticky in the US. But if that happens, could that emerge as a risk for Indian equities as well?
To the extent that short-term hedge funds take calls on oil, right? Yes, oil going to 95 was unanticipated. If you see the oil Brent futures trending over the last 6 months, they have been indicating a stability around 80. So this move to 95 is a bit of a surprise, but I would say that these hedge funds will take a call on whether there's going to be counteraction from the US by increasing supply or whatever to keep oil from going past 100. So I think that to some extent, yes, the 80 to 95 move took the traders outside India by surprise, and there could be some amount of profit booking coming in. But at the same time, like I said, there is enough buying power both with the long-term capital flows from sovereign wealth funds as well as from domestic MFs and institutions, which could absorb this cushion. So while there will be volatility consequent to oil and consequent to a potential Fed rate cut getting delayed and pushed out from this year itself, right? So the emerging market flows would tend to get affected due to that, because higher interest rates means that money can remain in the US. But I would say it'll be a cause of volatility, but not a cause of a deep correction or a bear market or anything like that.
Okay, and back home we have the RBI policy today. Of course, it's the first policy for FY25. The last one before elections. So it's expected to be a no surprises kind of a policy, right? But any thoughts as to whether the governor could look at changing the stance, or any positive surprises you may be expecting from the governor in terms of growth, upward revision in growth as well?
So I think that I am expecting the governor to speak positively about the rebound of growth. I think that the numbers which are coming in, you are rewriting old GDP numbers upwards. So I think he will definitely convey a good buoyancy around the growth expectation. He will put a caution on account of the oil price spike, which for India is big. 83% of our crude requirement we import. He will caution. He will also caution on await the monsoons prediction. So he will say that it's early to call a win on inflation. It's nowhere getting close to 4%. So with good growth prospects and inflation not likely to come below 4 in the near term, I don't think there is a need for a change in stance as far as his interest rate outlook or the withdrawal of accommodation. I think it will be stable and status quo, which I think the market anticipates. And I think a no negative surprises policy is good enough at this point of time.
Okay, another big cue for us would be the earnings season, that starts next week. Of course, IT will be kicking off the earnings season. The street may have already baked in a couple of more quarters of slowdown for IT, right? But, speaking particularly about this space, should one play it via the mid-cap names now?
Not necessarily. I would still say that because IT still forms a significant part of the index and passive flows from outside India would continue to buy their share of IT, IT should remain as a safety component of every portfolio. So I think if you stick to it from that perspective, I would still say that the large cap IT names still provide you a cushion, because if at all there's a rebound in the IT in a couple of quarters, they are going to take it. So at the mid cap space, I think the valuations were looking a bit on the higher side. So I would say that at this point of time, stick to the large cap IT names from a defensive, safety oriented component of your portfolio. Stay there.
What about private banks? We've seen, a good pickup in deposit growth for HDFC Bank and for other banks as well. It has been fairly good. Do you think now, going forward, private banks will make a comeback and take the lead?
See, that's still a little bit of time away. From a medium perspective, I am bullish and positive. In the short run, I still think that, private banks are not great corporate lenders, right? And I see the next wave of lending as being driven by corporate, because on retail, I think RBI has also expressed concerns around retail lending, increasing risk weightages. So there's going to be caution from the regulator on the retail lending part. So the deposit growth that comes in, right? And in retail is always a highly competitive field, So the ability of them, the deposits are coming at a slightly higher cost. And so the NIM expansions, I don't expect that to happen in the near term. So from that perspective, for me, good quality PSU banks, which have a good CASA basis and which can take up the corporate lending. See, I see the private sector capex over the next 6 to 9 months. We're not talking very short term here. 6 to 9 to 12 months, as private sector capex picks up, lending there will pick up. And I think PSU banks clearly have an advantage there because of their ability to take a little bit of extra risk when it comes to taking a big ticket loan to a medium-sized corporate. Whereas private sector banks are very choosy, which is very good, from a perspective of credit quality and everything. But the immediate growth and the expansion of NIM and all, I would say the PSUs would probably be ahead of the pack. So good quality. Of course, the quality of the NPA book. PSUs also tend to accumulate NPAs much faster than private sector banks. So with a medium-term call, you've got to be cautious that PSU banks with good lending practices, good, processes and all of that, I would say. So to that extent, again, the IT's recommendation I would repeat here, good quality private sector banks should remain a part of the safety component because the safety and continuity of the earnings stream, I see that. Don't expect a much of a margin or a NIM expansion to come and deliver great value, but they should remain a core part of your portfolio. Again, because in the large cap indices, they're a significant part of the index, and passive flows from abroad will keep buying that. So I would say, do not ignore them at your own peril, but do not expect them to become the growth sector of the rally in the immediate future.
I also want to get in your thoughts on the realty pack that has been the best performer of FY24. Realty stocks have been riding on the pre-sales data that have been fairly strong, right? But that momentum is expected to slow down in FY25, according to some brokerage reports that I was reading. So do you think all the good news is already in the price for realty? What could be the next big trigger here? And have valuations, entered the uncomfortable zone?
It's reaching there. I think the good news is already in the price. There's a greater probability of negative surprises versus positive surprises. So I would say if you get good money, book profits, and stay around and hang around and wait for the results to actually come out before you take a fresh call on those.
Right, there's a lot to talk about, but we are short on time. So last question really, at a time when markets are all-time high, should one really look for value or should one look at growth investing for superior returns over the next, over a 2 to 3 year period?
Very interesting question you posed, because the growth in the markets has been on value.
That's a very interesting point you made.
Value, right? So it's very interesting you pose that question because all the money you made is on the growth in the prices of value stocks. So at this point of time, you have to look at it and say that now is growth the new value? Are you getting me? Because prices of growth, right, when they factor in the surprised upside that can happen in a growth stock or a growth sector, may not be fully factored in. But in value, it's a catch-up story, and that catch-up has happened. Now, from here on, unless the growth goes up, the gap between value and growth will not come. Today, there's hardly any gap between value and growth in terms of the price. So I would say bet on growth because there is a better chance of a positive upside surprise both to the prices and to your portfolio.
All right. So when you talk about growth, would you talk about the PSU space?
Not necessarily PSUs. I would say look at the domestic economy growth and what is related to that. So industrials, building materials, housing, real estate, discretionary consumption, right? And PSU banks, right? In the corporate-oriented banks, the cycle which is on an uptrend and which is where you will see that the actual
I think there is some issue with the the feed. But Sunil, it was interesting chatting with him, and he pointed out a very interesting point that there is the gap between value and growth has diminished, and that's why you should look at growth stocks at the current juncture. With that, Raja is waiting by. Let me quickly take some viewer queries that have come in with him. I want to take up a query on Syngene. This one has come in from Dhaval. Syngene within the pharma pack, how is that looking on the charts now? Should one buy?
Yeah, considering the way the market is playing out, pharma seems to be the top sector for the day, and pharma stocks are definitely firing. I had mentioned Glenmark, that has also started moving, and Syngene, yes, Syngene is on the run, and I think that it's a good buy at current levels. You can trade it with a stop loss below 724.
All right, that's the view on Syngene. Hope that answers your query, Dhaval. The next one is coming in from Rizwan, and he wants to know your thoughts on Campus Activewear. Of course, the stock has been stuck in a downtrend, but this week, over the last 5 sessions, it has shown some bit of uptick. So here at 234 or thereabouts, would you advise a trade, or would you say look at other footwear stocks like Bata, for instance?
Yeah, the footwear sector per se has not been doing great, and Campus has definitely been on the sell side for a while. Now, what you are witnessing is some small bounce here. So this does not augur well for investment purpose. So if you're looking to trade the day, then it's fine, but it's better to look for some other opportunity.
All right. Look for some other opportunities. Campus, is largely on the sell side. But aside of that, lots of queries coming in on the banking space itself. Kotak Bank, we already spoke about HDFC Bank and IndusInd Bank. What about Kotak Bank? Because this has also been one of the underperformers in the private banking lot.
Yeah, Kotak Bank, comparatively, we spoke about IndusInd. IndusInd was not showing some effort to move up, but then Kotak Bank definitely is, and I see that after dipping down into some supports, it's showing some signs of revival. So one should continue to keep a track and then take a call, because right now it's still on a recovery stage.
All right, last query really, this one is again on the pharma pack itself. Pon Rajesh wants to know your thoughts on a Biocon. Any advice here?
Yeah, see, Biocon has shown bits and pieces of revival, but then the stock continues to struggle. So when I'm looking at the pharma pack, I also see what the kind of plays the stock is performing in. An example, yesterday, Laurus Labs revived strongly from lower levels. It's a good stock to consider. So every sector has got certain stocks that are doing well, and you should focus your attention on those stocks rather than buying some beaten down stock. So now Biocon has got a lot of news flows that come into play. So we spoke about Syngene. Next, we are speaking about Biocon. Both are related, but Syngene seems to be performing better.
Okay, that's the view then. Hope that answers your query. But with that, we've come to the end of the query segment. And Raja, want to take this opportunity to thank you for joining us every Friday and sharing your thoughts with us, and also helping our viewers navigate all their stock-related queries. Look forward to interacting with you again next Friday.
Yeah, thank you. Bye. Good day.
Well, with that, of course, important cue today, of course, to watch out for will be the RBI policy decision. Just about minutes to go for the governor's address, where he will be announcing his policy decision, as well as throwing some light on how the forecast for inflation and growth look like at the current juncture. So it's likely to be a status quo policy. As I mentioned, growth, of course, that seems to be throwing positive surprises quarter after quarter. So let's see how things go at 10 a.m. But we will have a battery of experts also joining in to decode the fine print of the RBI policy decision. Dipti Deshpande of CRISIL, as well as Achula Jethmalani of RBL Bank, Andrew Holland of Avendus Capital Public Markets Alternate Strategies, and Hemang Jani will all be joining in to decode the fine print post the governor's address. So tune in at 10 a.m. But for now, it's a goodbye from me and the entire team. Thanks a lot for tuning in. Stay tuned to Money Control, as we'll be back at 10 a.m.